Oh, yes. Finally, men of faith, right? All right. I want to say hello to everyone across social media platform. Welcome to another episode of the High Net Worth Investors Guide. The High Net Worth Investors Guide is designed to provide information to rising stars in business and to business leaders. This platform stands on four important pillars. One, we help you to understand how to get prepared for success. And of course, as you prepare for success, this platform talks about how to apply yourself after success. And of course, the suggestions and recommendations that you will be learning from this platform are largely experience based and they're academic based. Once you apply yourself in the right way, you should be able to come into your success. And we look at how you manage success when you get whether it's financial success, business success, is how you manage that in order to expand that. So today in studio, we have a number of dynamic speakers. We have Frank, who is an economist and many years experience as a lecturer. We have uh, Paul Whitehouse, who is a financial expert. He also served in law enforcement for many years, also in the United States of America. Uh, as a financial expert, he really ensures that businesses get the kind of support that they need to not only know about finance, but to access capital. We also have Joel Bagwandin. He is an economist. He has tremendous years working in the banking finance sector. He's also a freelance journalist with tremendous years behind him in terms of also representing businesses. We also have the best for last, which is Peter Scott.
Mhm.
He is a great innovator. Uh, he is the great mind behind helping people to understand the importance of having their personal life master plan, their family life master plan, their corporate life master plan, which is so profound for success. I love the role that he plays in terms of what he's doing because I do believe without a plan, you're likely to go very slow with where you want to go. But with a clear plan, it gives you a clear mental picture in terms of what you want to accomplish, why, and how to accomplish it. And Peter and his expertise will be sharing his knowledge, his background in terms of that platform. Um, well, as I would normally jokingly say, I'm a nobody trying to be somebody, trying to connect with people all over the world. But I represent multiple brands. The brand that I want to talk about today is the Bestseller Portal. It's a unique brand that we have developed. And as time progressed, you will be learning so much more about the Bestseller Portal. I will put that website up. So I want to encourage the public to log on to that website so you will be able to get more information about that platform. Today, we will be looking at factors that hold businesses back and factors that push businesses forward. So each of the panelists will be talking about critical issues that if you're a rising star in business, you need to saddle in to ensure that you get this information and you're using this information to your advantage. So without further delay, I'm going to ask everyone to give a brief introduction of themselves. Although I know I give a brief, and then I'll get the the program rolling with Joel. I'm going to start with Joel. Joel, can you give a brief introduction about yourself?
So thank you again. Good afternoon, everyone on the panel. Good afternoon to your viewers. And if I may, Gary, I wish not to add or take away anything that you said, with the exception of one correction. I'm not an economist. I'm a financial analyst. Economist and finance people are different, and the real economist, maybe with the exception of my colleague here, they tend to get offended when people call themselves economists, and they're really not. But I've never,
Okay,
the media
fair
tend
enough.
to, the media in Guyana, because I'm actively involved in writing and stuff. Reporters here, they don't know the difference between a financial analyst and an economist. So they tend to use the two terms interchangeably. So that's how
Interchangeable.
contrast.
I got
Yeah,
you.
yeah, yeah. So to be politically correct. So with that said, continuing given the topic that you've outlined for today, I have chosen to continue from the discussion we started off last week, where we're talking about access to financing, and we talk about it in a very broad way. Um, but well, in terms of my presentation, I deal with it in a macro sense. So today, given that you've now outlined, specific things for us to deal with, I will extend on that topic, but it is going to be more micro focus and from the perspective of my own experience, professional experience in dealing with companies here in Ghana. So the first one I want to speak about is on the are some of the financial management challenges that many companies have here, with the exception of the larger companies, the publicly traded companies. Those companies here are properly managed, properly organized. Um, they have sound balance sheets and so on. They have good systems in place. They recruit professionals. For the for those that are in the small business category and the medium-sized business category, often they have great difficulty in practicing what I want to call prudent financial management. And the first is accountability, accounting and accountability, basic things. The need for them to keep proper record and accounting in place. Right now, we're working with two clients, two small companies and this maybe is a good example to discuss for the benefit of the viewers. We're working on a company right now, a small company that only started up about going on to 2 years now. And when this company started, one of the principal approached me to help them to, provide financial management training, provide accounting training, as well as set up their systems and so on for them. And, they even talk about retaining our services to provide that sort of, technical guidance along the way. And it never happened. It never happened. And now, 1 year later, one and a half year later, going on to 2 years, they have reached out to me again now to engage my services to help them to fix the mess that they have created by virtue of not doing the right thing in the first place, which is what I set out the framework for them. Now, and during that period, they would have engaged a lot of people to come and correct their mess, because they had people who knows nothing about accounting, for example, and they're not keeping proper records. They're just posting in the system as they feel. They write a bill when they feel like or when they remember. There is no proper record system for the inventory, so you can't really match back. Sometimes you find that the sales is not matching back to the inventory they have in stock. The sales is greater than your inventory, and all sorts of things. And they've engaged several people, several accountants rather, to help them now to fix it, because now they have to submit their financials to the authorities, to the tax authorities, and they have to make their statutory filings, and they have to get audited financials because they're incorporated as a company. And other accountants refuse to work with them because that is how badly messed up it is. That's a perfect example that I'm dealing with now. So I've taken on the job because I happen to know the principals, you know, and based on that relationship, I'm providing that assistance to them to now go through, fix the record, fix their accounting, everything from scratch. Now, when you got to when in a case like that, when you did do the writing in the first and beginning, and now you got to come back and fix it. It's tedious, it's painful, and it's more costly, right? And it prevents you from growing, it prevents you from accessing funding, whether it's funding from the bank, because if you don't have proper records, the bank is not going to lend you because you can't demonstrate that you could manage the resources properly. And you also prevent equity investors because if you don't have proper accounting system in place and accountability altogether, nobody's going to give you the money, right? So that's an example on the importance of it may sound simple, but it has significant cost to your business and cost in terms of inhibiting growth. So that's the first. Get it right in the first place. Invest in proper systems and get the professionals to help you. It also has, secondly, it helps with your risk management because when you don't have proper internal controls, like using the same case study, the same case example rather, it means that they have no internal control policies. So, for example, everybody is making decision. There is no checks and balances. So now your risk of how do you determine whether somebody is stealing from a company? How do you prevent the possibility of theft or fraud? And those type of situations, are attractive for persons with intention because you have people who are unscrupulous and they're working for you. It could be the delivery guy. It could be the delivery guy could be stealing from you because these people, they're smart and they have enough understanding to know whether this business is properly run or not. And the moment they figure out that you have no controls, you don't track this, and you don't have that any sort of accountability, that
No
is
proper
when
inventory
people steal from you.
and stuff like that.
Your people steal from
Mhm.
you, and you don't even know. You don't even know. So internal controls, coming off of the first point I made in terms accounting records is one, accountability is one, then internal control policies, including as well from an accounting perspective and from a management, day-to-day management perspective. That is important. Thirdly, a lot of businesses here, and we have to change this culture, lack of long-term planning. People just wake up and I was looking at these podcasts by some of these business gurus internationally, and one of it, the presenter was differentiating between being self-employed and being an entrepreneur. I don't know if in the US you use the term self-employed. In Ghana here we use the term called self-employed, meaning meaning you have your own business. But the differentiation is that a self-employed person is different from an entrepreneur. And it is true in our sense where you have a lot of people, they're self-employed, meaning they have their own business, but they don't have the entrepreneurial acumen, long-term planning, foresight, vision, taking greater risk, and these sort of things. They have a business, it's generating revenue, but it's like they're an employee of themselves. They don't have the ability to grow the business at a strategic level. That is where entrepreneurship comes into play. There's a difference there. So we have a lot of self-employed people. And the differentiator here is that their ability not investing in long-term planning, not investing in putting in the time. And when I say invest, not financial resources only, but the time, investing your time and energy to build out a proper strategic plan, build out and set out where do I want to take this business in the next 5 years? How am I going to get there? How am I going to grow it? And then you have another situation where you do have some businesses that do some sort of strategic planning. And this brings me now to my third point, performance management. Out of that strategic plan, it sometimes in some cases just becomes it becomes a document that accumulates dust on a shelf. Nothing is done with it in terms of implementing it and tracking progress. Now, when you long-term planning, budgeting, forecasting, setting targets, you also need to have performance management now, where you need to build out activities and you need to break it out into weekly, monthly, quarterly, half yearly, and yearly. What are the activities do I need to do on a monthly basis, on a weekly basis, monthly basis, quarterly basis to achieve these targets for the month? And then you constantly have meetings, you constantly track your accomplishments, whether you've achieved those targets, whether you have not achieved them, and if you did not achieve them, why you did not achieve them. Was it a lack of resources? Did we not take into account some other variable or some other factor? Those type of activities are largely lacking in many businesses, which largely inhibit their growth. And there's a term that there's a contemporary term, high performing business, high performing organizations. This is how you develop and build a high performing organization by doing these type of planning and this type of implementing performance management. That now brings me to my fifth and last point, which now feeds into a lot of businesses. They don't know their market. And when I say for today here, not their market in the sense of just the consumers, the consumer aspect, which is also equally important. But what I want to focus on for today's discussion is not knowing their competitors, not even knowing themselves. Many times I meet with business owners and I try to walk them through a SWOT analysis. They can't tell me what are their strengths. They can't give me their top 3 strengths. They can't give me their top 3 weaknesses. They can't tell me what they foresee as threats in the external environment to their business. And if you don't know these things, how would you implement mitigating strategies for the threats, perceived threats? Opportunities. They see opportunities, but in a vague way. They're not able to articulate or to pursue and focus on the specific opportunity that they want to strategically go after. And knowing the strengths and weaknesses, performing SWOT analysis is important, because knowing the strengths and weaknesses of the business is so important to know how to leverage your strengths. And how do you convert your weaknesses into strengths as well? How do you improve in those areas? And not only knowing it for your business, but it is equally important to know the strengths and weaknesses of your competitors. Because how else are you going to compete against your competitor? Say, for instance, one of the things you don't do is never try to compete with your competitor on their strength. You're never going to win. Never try to do something better than them that they're really good at and you're not good at. You got to understand what are you good at that they don't. And that is, we're talking about competitive advantage. many businesses don't invest enough time in studying their business, understanding their internal weaknesses and strengths, as well as those of their competitors, which would better inform um, their strategies, their plans, and how to navigate the environment in order to succeed. So those are the five things. If I'm to summarize quickly, firstly, accounting, the importance of keeping proper accounting records, having proper internal control. That helps with improving your accountability. Accountability, even though, let's say it's a family owned business, it is important to have accountability because at some point you're going to grow. At some point you're going to go to the bank for funding. At some point you're going to want to enter into a joint venture with somebody, if not giving up shares. And if you don't have, your business is not managed in a way that accountability could withstand scrutiny, nobody's gonna work with you. Then the internal control, managing your risk. Third, long-term planning, the importance of developing your strategic plans, but also having a flexible strategic plan because things change. We operate in a very dynamic environment, so you will have to make tweaks as you go forward. Constantly monitor, track, and manage your performance. Manage how you're doing in terms of the targets that you set. Develop a set of activities that you need to do on a weekly basis, monthly basis, quarterly basis, and so on, in order to achieve your goals. And then fifthly, the knowing your environment well, knowing your competitors, knowing your strengths and weaknesses as well as those of your competitors, so that you can make better informed decisions. So that is my so those are my contribution for today's segment.
Great. And that was definitely a lot of information. Um, I've taken some notes. You talk about the importance of accounting. Uh, I would want us to, for next week, perhaps I will have us expand on these various areas. Today, I will have each person's give five challenges that businesses are faced with and look at the five solutions. But I do believe that each of the talking point that you would have raised, we can further examine it. I do believe that healthy accounting practices is vital for you in business. Um, while the accounting is important, um, as what was pointed out, it has many different uh, grounds on which it's important. A private equity investors, they want to see your financial. Banks, in most cases, don't want to see your financial. Even those who might want to give you some degree of non-secure financing, they want to see your financial data. And the only way you can actually give a healthy financial data is by keeping uh, healthy financial record. So, as Joel would have pointed out, if you want to be successful in business, you may not be the accountant, but in building out your organization, you want to see it at three levels: strategic, tactical, and operational. And at your tactical level, and perhaps you need to have your accounting expert that can collect data, store data, manage that data, and keep you on track with finance. Each of the area I can talk at length about each one of them, um, but I love the points that you would have shared, Joel. And next week, I would love for us to spend some time going into all of them because see things like long-term planning. Again, when I see long-term planning, it tells a story, and it tells a whole lot of story here, you know. Um, to do long-term planning, it means that you need to have market data, market information, and that data shouldn't be based on speculation. It should be based on reliable secondary data. And I say reliable because sometimes we depend on secondary data that is outdated. So reliable secondary data is what you need to collect and develop in your short and long-term plan, or you need to invest time on what we call the primary data collection, which is primary market research, which has tremendous advantage. I would want us next week to expand on all of this, so we can help the listening audience to understand the significance of what Joel would have talked about. I think the last point that Joel would have made, he spoke about market intelligence. And that's something that I talk a lot about, a whole lot on our platform. If you're in business and you don't have market intelligence, it means that you're speculating. And if you're speculating, it means that you, by default, you will fail, because what Joel is hinting on, along with the SWOT analysis, we talk about the pest analysis. You need to understand pest analysis also. But even more importantly, you need to understand your target market. All right, based on demographic factors, based on psychographic factors, based on geographic factors. Because in the absence of this body of knowledge, you really don't have the intelligence to help you to make informed and educated business decision. And again, when you come to investors like us to invest in your business and you do not know your financials, as Joel is pointing out, you do not know your market, as Joel is pointing out, and you don't get the funding, you're disappointed. But you're going to fail because you don't have these information. So the information that Joel has just presented, is really to get you prepared to start interfacing with funding agencies, to start interfacing even with your client, because with market intelligence, it will tell you what business you should get into. All right, because you understand your ideal client, you understand what are their specific needs, wants, and expectations, and you now understand how to build your value offer to align to those expectations. So
To,
market
to,
intelligence.
to, to that point, Gary, before I drop off, you remind me of an important thing of market intelligence and how I remember looking at an interview with PepsiCo CEO,
Mhm.
and she was saying that she was giving an example of when they hired a consultant. The board wanted to hire a consultant because they couldn't understand why is it the sales was flattening out, and they couldn't understand, the changes in the consumer market. So they wanted a consultant. The board was discussing getting a consultant to do a market study to tell them, what's happening. Why is sale declining of our product? Or this is PepsiCo. And she said, as the board meeting was going on, and all the directors were articulating, oh, we should get a consultant. In the very board meeting, she did the market study right there and eliminated the consultant instantly, because in board meetings you take breaks, and in
Mhm.
board meetings you have refreshments, you have coffee, you have tea. Obviously, for PepsiCo, you would have PepsiCo products, Pepsi and whatever else beverages they produce, and then you have water. And in the boardroom, everybody was drinking water. Nobody was drinking the beverage. So she said to them when they go back to the break, she said to them, "Why are we getting a consultant again? You've just demonstrated the market intelligence that we're looking for. Nobody drank the beverage. Everybody drank water. That is the change in the consumer market. People are getting more and more health conscious.
Health
So
conscious.
we
Hmm.
need to introduce now a product to target that segment of the market that are more health conscious." So as you were talking, I remember this. I said, let me
Yeah.
mention it for the benefit of the viewers, how simple market studies and market intelligence, sometimes it doesn't require these granular studies. Sometimes you just need to pay attention within the organization. Just need to pay attention.
Yep. The term that we use in marketing is to be market sensitive and to be market oriented, and sometimes you pull data from so many different sources. I think in the marketing term, where she would have pulled that data from is what we would call the executive um, unit, because you have that type of pull where you have executives sharing their knowledge, their experience. In this case, is observation of how executives are operating that help her to make that type of decision. I like that story. Now, what I want to do, I want to, and Joel, be prepared because next week I want us to go into all of the areas that you would have pointed out. And I will give everyone over the next few weeks to also dig in. Once you have some time next week, I would love us to look at that.
Unfortunately, I would not be able to join next week. Next week, I will be in London. I am speaking at a
Okay.
conference in London next Saturday, so I won't be able to join next week, but definitely the following week.
No problem. What I will do, I will still take up each of the talking points and I will do an examination of them. And I wish you all the well on your international speaking engagement. And
Thank you.
congratulations. Welcome. All right. I want to come to Paul, and then I'll come to Peter, and Peter will tell us about the importance of having your master plan. I do believe that the master plan today is vital to every business because think about it. If you have an employee that has a clear mental picture of their life's master plan and they are given the technical support to achieve what is set out in that master plan, how much more successful are they likely to be? How much better would they be to function in life and function in their organization? Peter will walk us through that. But just before I come to Peter, I want to come to our good colleague here, Paul Whitehouse. He's a financial expert. And Paul, I would love to hear your take in your experience. What are those factors that you believe are holding businesses back? And what are those factors that can push them forward? From your professional observation and experience, I would love to hear from you, Paul.
Okay, thank you, Gary. And just like Joel said, I'm thrilled to be here with everybody on this call and to participate. Well, slow payments for businesses on outstanding invoices, that's often a problem. That's when you have a cash flow problem, you have to solve it. Solutions for something like that, contact your customers and ask them, what can I do to help you to pay quicker? Maybe by asking that question, you might even come across the fact that they're in desperate times and you might not want to advance them on invoices, the product. We don't want it to get to that point, but that might be the case. If they're ready to go over the edge, you don't want to send them $250,000 worth of product and not get paid on it. It's not typically, that's typically not the situation, but you have to keep a tab on your cash flow. And a solution, a financial program that is a solution for slow cash flow is called factoring. Factoring essentially is you sell your invoices for a discount. Discount could be 3 cents on the dollar or 1.75, almost 2 pennies on the dollar. You have a $10,000 invoice, you get advanced 80% of the invoice as soon as you submit the invoice, complete the service, deliver the product, and you can get 80% of that invoice upfront. Next question is, what about the other 20%? Well, that comes when the client pays the invoice 30 days or 45 or 60 days later. So Cash flow, first approach your clients, ask them, can you pay me quicker? Because that's a nice, easy way to do it. And they're not going to mind you asking them that. You might find out some information you might need to know, or engage with factoring. And that is something that we offer at Patriot Business Finance Consultants. Another problem is rising costs of raw materials and inventory. It's expensive. How do you do that? How do you solve that problem? And I learned this from a really smart lady who's a business coach. She said that people, in her experience, are shy about raising prices. We don't want to raise prices. We think that it will stop our business, but it won't. It just won't, because everybody's raising prices, and I don't enjoy the fact that prices are rising, but it's a fact. And if you don't raise your prices, you're just going to make less money. Your quality of life will go down. Your business's quality of life will go down. So don't be afraid to raise prices to counter rising costs of raw materials and inventory. Sometimes you have to do that. Another problem for businesses is low personal credit scores and a low Paydex score, or a non-existent Paydex score. Well, the only way to really solve that is to work on it, pay what you owe, and raise the credit score. But if that is a problem and you're not addressing it, address it immediately, because it will benefit you, because money's more expensive with lower credit scores. Every dollar that you save on anything in your business, including cost of money, goes directly to your bottom line. You knock off 2 points on interest cost of money, and that's more money that you have at the end of the month, and at the end of the year, and at the end of 10 years. Okay. On that subject, can you still be approved with difficult credit? Absolutely, yes. We do it all the time, every day. Here's real quick the difference. Time in business, 3 years plus, profitable with ability to repay the new debt, and good to excellent personal credit scores gets the best deal structure, best term, best lowest cost of money. Flip that over, very difficult credit or a startup business, they can absolutely be approved for financing. And the thing that makes that possible is money down. Nobody wants to put it down, but if you have difficult credit and you need that equipment, well, you got to do what you got to do to get the equipment, to increase sales, to keep business flowing and fulfilling orders. So next thing would be problems, difficulty retaining clients. Back to that smart lady that I know that gave me information. How do you retain clients? Well, you stay in contact with them. First off, you got to give them the best service. That's a given. If you're in business, that's what you're probably striving to do. And if you're not, you should, but I'm sure that you are. After that, there's a lot of competition. You want your clients to know you and love you because you did good for them. You were fair, and the pricing doesn't matter. People buy from places that are more expensive. It's not the pricing, it's the service and follow up. Know their birthday, send them a birthday card, a regular email campaign absolutely helps. There's so many things there, but if you're having difficulty retaining clients, get a business coach. Get the right business coach. Not all business coaches are created equal. The particular lady that I'm talking about, I think she is at 1,000%. She's smart. And the information that I've learned from her, it changed my opinion on a lot of things. So get a business coach that might help you to get the confidence to do the things that you need to do. But look at it, study it. Ask yourself, what would I want my service provider, whether it's an esthetician, whether it's a manufacturing company, whoever you're buying from, what would you want them to do to keep you? And then put that in place for your customers. Okay. Let's see what else. Friction and disagreement between partners. That happens. I'll have a Zoom meeting with 2 people, and the next one will call me the next day and complain about the other one to me. I can't be a part of that. I don't want to be a part of that. I just solve their problems. There's some problems I can't solve. But if I was looking at this from a distance, a strong operating agreement with defined roles. Everybody knows what they're supposed to do, and just do it. And if you, in spite of that, if you got a great business relationship, you have all your strong operating agreements in place, and there's still a disagreement, talk it out. It's very simple. Talk it out, be calm, find a solution, be willing to be wrong, be willing to accept new information and change your opinion on it. Maybe you're correct. So stay strong if you feel that you're correct. And maybe your business partner, you both have to have that open mind that you're willing to change your mind, accept new information, and agree with one another. You went into business with each other, you want to stay in business with each other, and you want to continue the mission forward. And the best way to do that is to agree and work together well. Thank you.
Wow, that was definitely a whole lot. And I do believe that you played a lot on some of what Joel would have said.
Mm-hmm.
And Joel had to drop out because he has some other commitment today, but you play a lot on some of what he would have said. Now, the point I want to emphasize, and you're right. Sometimes I believe that there are people that believe that the lowest cost product wins, and that's not necessarily so. If you're harboring this type of a way of thinking, it means that you don't understand your market. Because I lectured a few years at the American University, and one of the things I would often say to the students, there are a particular demographic that if the price is too cheap, they associate cheap with being not valuable. And because of their demographic data, and you don't understand that demographic by your data, they reject what is cheap. They would buy the same cheap product that is being sold at the corner at this price for 5 times the price, where there is more convenience, where there is more safety, where there's all of those other things. So it's important to understand your market as we look at price related issues, as Joel would have hinted on, and as Paul would have just expanded into. You may have to raise your price sometimes, even to appeal to your target audience. Sometimes keeping your price low is forcing you not to necessarily appeal. It is creating that barrier between you and your client, because the way they perceive the product um, is not worthy because of how you price it. These are things that we will examine further over the next few weeks. So, Paul, do keep note of the facts you presented, and we will go deeper into an examination of all of this over the next few weeks to ensure that the High Net Worth Investors Guide is truly bringing solid research data to our audience. The other thing that you spoke about is the importance of FICO score. And of course, this is in the US market, the more developed financial market. Everything in the US market, in the developed world, middle income economies are now catching up in these regards. They look at your FICO. And if your FICO is not where it's supposed to be, the average person should at least have 680 in FICO. That's what Paul was talking about just now. Now, in the absence of having a 680, it's going to create some degree of challenges for you, because your annual percentage rate will be influenced by your credit score. All right. So the higher your score is, the lower your annual percentage rate. And it's important for you to understand this. Some of what Paul would have hinted on here also is that once you have a healthy FICO, you want to quickly carry that over into a PAYDEX score, because the PAYDEX is where you're now able to play the game of business the way the big boys play the game. And that's what Paul is also hinting on. These are things that we will do a deep dive into over the next few weeks to ensure that you understand this. Some of the things Paul would have hinted on is client retention. This is so important if you want to win in business. And of course, Paul is looking at this from an investor standpoint. If they're invested in you, they want to know that you're able not only to retain your client, but you're also able to extend your customer base, because it's your ability to retain and expand your customer base is what's going to really help you to cash flow the business and honor your weekly or monthly debt obligation. The more successful you are at doing these things, the better you will be to access funding, and that those are some of the points that Paul is bringing home here. The last point I think he raised was the issue of conflict, internal conflict. No one wants to fund an organization where there is that type of conflict, because you can anticipate that if that conflict is not resolved quickly, they will self-sabotage and undermine the potential of that business itself to achieve its business objective. So these are all valid points that is being tabled. So for the viewing public, the listening public, I want to encourage you to keep following this podcast. And on a weekly basis, we will continue to bring you information that will help your business to grow and to leapfrog. And of course, this is not just about the information sharing. In the event that you need access to capital, feel free to reach out to me. Feel free to reach out to persons on this panel. And once you reach your fundable, the beauty about it is that if you're not fundable, we are able to work with you to ensure that you're fundable. And once you're now fundable, we are able now to give you that support to access the capital. Now, Paul is the guy that works with you to ensure that you access the funding. I also work with you to ensure that you access funding. But we do more than just that. Because on our platform, we talk about you should understand financial instruments, because there are multiple type of financial instruments. Debt may not be the right funding source for you. Credit may not be the right funding source for you. Equity might be the best funding source for you, depending on where you are at the stage of growth in your business. Or perhaps smart investment portfolio might be something for you to look at. We work with you to ensure that you understand this and you're able to make an informed and educated decision as to how you select your financial instrument. That's one layer. You need to understand how to access, you need to understand how to leverage, and most importantly is how to mitigate. So you have the debt, you're happy, you're excited, but how do you exit? Do you have an exit strategy? So whether you're dealing with debt, equity, credit, creative financing, or hard money lending, you need to understand your exit strategy. Paul would have hinted on this. Understanding some of this is what's going to help you to reduce the cost of capital and have more residual income that you can now plow back into growing, expanding your business, into hiring new staff, into investing in marketing for more client acquisition. So these are things that we will go deeper into over a period of time. So Paul, I want to thank you for that presentation. Keep it. We will expand on it over the next few weeks so as to ensure that our listening public, those who are in business, really understand what it takes to be successful, and to know that with us, they're going to get the kind of support, that comprehensive support to move their business, their vision forward. All right. So anything else anyone want to share before I come to Peter? Peter will walk us through the importance of the master plan. All right. Go ahead. Go ahead.
One thing real quick, just to illustrate the difference in your bottom line and cost of money. good, good to excellent FICO and Paydex scores, time in business, profitable business. On an equipment finance deal, leasing, you're looking at 8, 9% in that situation. Move to the other end of the scale, and you're looking at and minimum money down, maybe first and last payment, or 10%, so you don't have to pay it at the end. Move to the other end of the scale, and you're looking at 30% down. So if you're buying a 250,000, if you're trying to get a $250,000 piece of equipment on an equipment lease, let's talk $75,000 down instead of 10,000 between two payments, and 15, 13, 14% interest rate as compared to that. That spread affects your bottom line a lot. So that's just wanted to add that because that illustrates
Yeah,
it.
it definitely does. The point that I want to just add, what Paul said is very, very important. There's a major difference between a spread of 13% and 30%. Um, at 30%, you're paying higher for the cost of capital.
Oh,
Um,
not cost of money, but money down to get the
oh,
deal
money
approved,
down.
to get the deal
Got
approved.
you.
Yeah.
Got you. Yeah, that too is a major challenge because depending on which financial institution you're dealing with, depending on which financial instruments you're using, they will ask for 3% down, 10% down, 20% down, or in cases, yes, 30% down. Again, in most cases, to find the highest sum, the 30% down, to pay down, to acquire, equipment financing or any other form of financing, we see that many persons challenge with that. Again, I would always say, whatever your challenge is, make contact with us, make contact with a consultant. Because some of the things that we would talk about, Paul, is what if we are able to get 0% APR funding? And we are able to get 0% APR funding, let us say, for about 6 to 24 months. All right. So the 30% can come from that. But because many persons may not know financial instruments and how to access and leverage financial instruments, they are stuck in that problem zone. All right. But with us, we're going to show you the best possible alternatives that you can use to move your vision forward. So wherever you are, if you're feeling stuck, I want to encourage you to definitely reach out to us. We would love to hear about your situation, where you're at, and we will definitely put our best foot forward to ensure that you get the kind of support that you need to achieve your business objectives. So thanks for that share again.
My pleasure.
All right. Peter, my friend, all to you.
First of
The
all,
master
Gary, thank you so much, Paul. I didn't get the other gentleman's name.
Frank. His name is Frank. Clement Frank.
Frank. And I know Joel was on earlier, and it's much appreciative of the expertise and the amount of information that is being, expressed in this forum. Gary, I must also say thanks to you in particular because you, from the time that I've known you, you have always had that determination to empower the community and to gather individuals who are skilled in their expertise, who are skilled with certain knowledge that can bring across certain information that is going to change people's future. And that, I think, is what we need now. The world has become a very crazy place. Since 2002, it seems as if we fell into a twilight zone. And more people seem to be spiraled downward. So when we can have an environment where, and to open it up to the community, where we have minds like Paul, Frank, he with his what he said earlier, Joel, when we can gather people and to create a place where individuals can come to hear something And if there's ever a time when we need ideas, when we need to know that whatever it is that is going on in our lives, it just and sometimes it doesn't take a lot. It just take a little tweet, just one idea, can make the difference. Because just listening, Paul went down, and in about less than 10 minutes, he was able to hit on some key elements that I'm like, wow, it creates such a shift. So to be in this environment, it's wonderful. My name is Peter Richard Gus Scott Sr., and over the years, my wife and I, we have been determined, to empower our community. We are like Frank. We are from the church background. My background has been that I have been over churched. I've been trained from I was young that Jesus is coming soon, and not that he's not coming soon, but I thought that he would have come already. And so, in my years of development, I got to a certain point in my life when I realized he didn't come at the time when they told me that he was coming, and then I was ill prepared to be living in a world that long, and now I had to rebuild. So in 2000, when the world was now, when we were saying that the world was going to fall into an abyss because the computer systems will not be know how to handle this new digital format that is coming in, and everybody was talking about Y2K. I realized it's time for me to make a shift. I had to change. And I took between 2000 to 2005, I had to unlearn everything that I had learned in 30 years. I had to go back and examine every piece of information that was not serving me well. And I had to just cast them out. And between 2005 to 2000, from 2005 to 2010, I begin to seek new information. What is going to help me to navigate my way into the future? And it is out of that we started, my wife and I, when we got together, we begin to look at it and we said to ourselves, okay, so what are we going to do together? I mean, we'll begin to do some self-inventory check. I look at my life. What are the skill sets that I have? I look at her life, her studies, the skill set that she had. And I realized my background has been in marketing. Back in Jamaica, I worked for Colgate Palmolive as a marketing coordinator, where I learned the value of having a product, putting a product in the marketplace, of connecting with the community, and some of those things that Paul speak earlier about retaining clients. That is such a powerful thought. And Colgate was what that company that knew how to connect with the marketplace. We go into schools, we try to connect with the new generation from early childhood, and it is those kinds of experience in my background. And then I begin to look at my wife's background, and I realized that she had a degree. She had a bachelor's degree in English literature. And I'm asking her, so you just have this thing here. What are you going to do with this? What can we do with this? And then I realized now from, the background of individuals that I came from, that a lot of these individuals, they love to write. They have messages that they were preaching their messages, very good messages, and they take those messages and they just keep throwing them away and go back to get more. So I said, look, every pastor and ministry leader, they need to write. They need to capture their message in book form. They need to make their messages to have longevity. And so we started a brand. We started a brand by the name of Legacy Chronicles. And out of that, we begin to connect with pastors, not just pastors alone, but Joel mentioned about the difference between business owners and entrepreneurs. And he hit the nail so much on the head, that entrepreneurs are individuals who look into the marketplace and they are looking for a solution. They're looking for problems. First of all, the mark of an entrepreneur is that he's looking for problems. And that is what we realized, that at the place where we were, we need to find big problems. We need it because at that time in my life, I was now 40 years old, and having have to throw out spend 5 years to cast out information that was not good, and then begin to research to find information that was wholesome and that would launch our lives forward. At 40 years old now, I said, look, I have 40 years now that I have to do some catching up. And so I got to look for some big problems to solve. And, that is how I got into the field of entrepreneurship. And an entrepreneur is just a person, I believe, that look for problems, the problems that are in the marketplace, and they go about to seek for solution. And Joel mentioned the difference. It's not just to have a business, but to find solutions to big problems. And then you gather individuals, like what is on these panels. Not all problems that we're able to solve by ourselves, but then if we can bring a collective of individuals together, and then you take that part, I will stay in my lane, and we begin to collaborate and solve those problems, then we begin to make the world a better place. So with all of that focus of, okay, so where are we going to go as a family, and how are we going to impact the market, we begin to discover that we're going to need a plan. We will need a plan. And she and I, my wife and I, begin to redesign our life. We begin to ask ourselves very serious question. I looked myself in the mirror at 40 years old, and I did not like the guy that was looking back at me. I had very little respect for the person that was looking back at me. And I had to say to myself, this has to change. And I had to go back to scratch and begin to redesign my life from the very ground up. And she and I, my wife and I, we began this process of personal life development, personal life planning. And we now begin to, we develop a product that we call Legacy Chronicles. And we realize that individuals, when we begin to look at begin to solve the problem in our lives, we realize that a lot of people have the same problems too. A lot of people are just going about life without, they just have a sense that they need to go into a particular direction, and they go. And we begin to realize the difference that it meant to us when we begin to plan from the ground up, when we begin to find a purpose, when we begin to ask ourselves the tough question of, Peter, who are you, man? Who are you? Who the hell are you? Why are you on the planet? What are you doing? How are you going to interact with your community? How are you going to build a family? How at that time, my wife and I, we just had our first son, and we begin to look at this young individual, and we're going to say that the world is crazy, as we say. Why are we having children? Are we going to introduce new human beings to a world that is like this? We need to have a plan, and we got to create that plan, that each time when they reach a certain age, then we're going to let them understand what they ought to do, how the plan is going to expand from where they are. And it was out of that, we begin to develop realize the importance. And even as I was listening to Joel when he was talking about the various challenges where businesses and enterprises are concerned, all of it, I realized, lead back to an issue of leadership. All as he begin to tick them off, going down, all of them goes back to an issue of leadership, personal leadership. And I tell you something about personal leadership too. I remember a couple of years ago, my background, as I say, is it with I work a lot from a child. I was trained to be a pastor all my life. I've been trained in the spiritual realm of developing spirituality, caring for people where their spiritual life is concerned. As I said, the only issue was that we did not develop the how do we operate in the world. We looked at the how do we prepare for people in the afterlife, but we took very little time to help people to understand while you're on your way to the afterlife, this is how life is, and these are the things that you need to do. And so I was in a situation now where I was helping a pastor. At that time, I was empowering pastors who are starting. I was a consultant to pastors who are starting up, because when I begin to develop these new information, and I said I begin to retrain myself to the real world, what is necessary, I now look at that education that I've learned. I discovered that entrepreneurship, business development, and I realized that business development and entrepreneurship is so needed in the areas where pastors and ministry leaders are. How can they begin to attract people to want to lead them when they don't themselves have a plan in where they were going and how they were going to empower those people on the journey? And what began to happen, Paul and Frank, here's what was going to happen. We came into agreement with this new church, and we started to say we're going to go in this direction. And then after a while, I realized that there is a slight change. There are slight shifts in the agreement that was made before. And I keep on traveling with the young minister in the same direction. But the more I was going in that direction, is the more miserable I begin to feel. I begin to feel out of place. I'm going back and I'm saying to myself, no, I'm beginning to feel like those years when I was feeling lost. And so I go back into my meditation and I begin to question the Lord about what was happening with that enterprise, that ministry enterprise at the time. And the Lord let me know that, look, what is leadership? And I begin to understand the concept of personal leadership. What is leadership, and how do I choose a leader? If I'm going to choose a leader, first of all, I have to decide where I am going. I have to know, so that personal life, family, personal life master plan is so essential, because it is going to give me a direction of where I'm going, where my life is going. And no matter what is happening around me, I am responsible. I'm responsible. First of all, I am responsible. I have to take ownership and responsibility. Now, if I'm going to choose a leader, and this is where the crux of the matter was, if I'm going to choose a leader, then at least the person must know, well, the person must be going in the same direction where I'm going. And then a leader, the concept of a leader is that the person is going somewhere. And if I'm going to choose that person as my leader, I'm going to choose them on the basis that we are first going in the same direction and they know a little bit more than I know. So I'm going to follow their lead, but they must be going in the same direction as I'm going. So when I realized that there's a change, I had to realize, no, I can't go in this direction anymore. I have to know, come to, as Paul said, you have to go and discuss it with the person. If you're having frictions, then you have to go and have a discussion. You got to let the person know something has changed. I'm not comfortable with this arrangement anymore. We start out well, we look at, we discuss things, and we can shake hands, and we can make amends. So the whole concept of understanding personal leadership, and how do we come into the realms of personal leadership, the concept of personal life master planning becomes so much important. And the more we begin to deep dive into this issue, we realize even to come to what the topic that Gary mentioned. What are those 5 things that is impacting businesses and enterprises in this day, and the whole aspect of entrepreneurship? There were 5 things that I encountered. Was that their number one is leadership. Everything is on leadership. So if we could imagine, the pyramid of how businesses are operate, usually it starts. You have the at the top of the triangle. It's the point is at the top. But then what we do realize, where effective systems are concerned, you have to flip it. It's not the leader at the top. You have to turn that entire system down, where the point is at the bottom and the leader is at the bottom, because that's where all direction comes from. That's where the responsibility comes from. So we discovered, for any business or enterprise to thrive in this time, their leadership is number one. Leadership is number one. Then if you're going to go into the marketplace, then there has to be a product or a service that is developed, that is designed, that is developed, and that is distributed to the market. And we have to find that product that a lot of people need, and that is going to solve a lot of the bigger the problem, the better. Then we have to know how we're going to market that product. We're going to have to know how we're going to the marketing is going to lead into sale. Then we got to know things become complicated now. When it is just one person, the entrepreneur can start out as that individual, but the more products and services are going out, the more customers are coming in. Now you're going to need a management team. So we look at it from that the 5 things: leadership, product design, development and distribution, marketing, sales, and the management. But all of that still is going to come back to leadership. Everything starts and stops with leadership. And the leader himself will have to have a master plan. What is the product, how we're gonna develop this product, go into the details of all that Joel mentioned and all that Paul mentioned. The master plan is going to take all of those conditions into consideration. So master planning is so key, and it has, no matter where we are or who we are or what we're doing. And I think at what time do we need to take consensus and to look at where we are. No matter, so a person can be 50 years in business or however much year in business. If we just stop for a moment, because then what I do realize that if we're going to scale, and if we're going to go to the next dimension and the next level, no matter what it is that we're doing, it is always going to come back to when we have a design, when we create a design long term. And Gary, I want to give time for us to have a little bit more discussion. But what I do find, Paul and Frank, what I do find is that here in the Western world, we operate, whether it is politician or ministry or business, we all operate in the same way. We think in the same way. So what politicians do? Politicians have a 1 to 4 year plan. And that plan is only designed to keep them in power. So even if the other guy has a better idea, they will sabotage the daylight out of that thing, because it means that they will lose power. So the short-term ideologies that we operate by, it is so selfish. It's so selfish, so short-sighted, and it is draining the life and the energy out of the society. And this is why we have so many wars and so many chaos, because we can't see more than next year. This time of the year, everybody is now thinking about New Year's resolution. And in the New Year's resolution, this is what is going to happen. People are going to take all their aspirations, all their dreams, all their everything that they want to achieve in their lives, and they're going to pack it into 2024. And then January, February, they realize that all that they're seeking to achieve cannot be achieved in 1 year. They become frustrated and then they give up. But how about even at this point? And so this is our message now going into, as we close out the new year, we are now empowering people to say, look, expand your vision. Right now, my wife and I, the kids, we look at our children, we look at the youngest one. I said to her, 40 years from now, you will be 49 years old. I look at the 10-year-old. I say 40 years from now, what your age is going to be. The 13-year-old, I say 40 years from now, you will be exactly my age. And so what are we going to do? Let us look at our lives in a long term. We begin to look at our resources. I say 40 years from now, you are going to have this same conversation with your children. So the concept of personal life master planning is so much important. And we have some services that we use to get it out. As I told you, we have a product that we call Legacy Chronicles, whereby we have a system that we have 50 questions, and we pass on those 50 questions, and we ask people, check yourself, ask yourself the tough questions. Because what we find, a lot of the issues where personal life development is concerned, as I said even earlier, we have to ask ourselves the question, the who am I question. If we don't get past the who am I question, nothing else, and we will always be going around in circles. And but when we're able to deal with that, if even if we are doing well, even if we're doing well, when we take on that personal life master plan, that is going to lead into the family life master plan, into the community master plan, and then the corporate master plan. I can say that, and I look at my family, I look at where we are right now, and we begin to feel optimistic. When I look at these young children, I can feel optimistic because we're now giving them a tool that they themselves can have a much different perspective on life. They can see themselves not just as a person who's just living day by day, but they can have a long-term vision of where they're going. And all this necessary is just for to tweet the process as we move along the way. But and here is what finally, Gary, here is what a personal life master plan does. Because when you begin to look at a long-term vision, what you really realize, as even Joel was saying, you're going to see your weaknesses. It's going to bring us to understand that I can't do this by myself. This is too big for us to achieve on my own. And this is why I'm going to need to collaborate. I've got to need to find individuals who are gifted in the areas that I am not so gifted persons. And so sessions like this now becomes very important because we have a long way to go, and we need to develop a support system, individuals that can watch our backs in the areas of our blind spots, and we can now have that corporate effort of moving forward, and and the success will be tremendous. Gary, thank you so much. Frank and Paul, thank you so much for your contribution, and this is my piece to the program today.
All right. Well, that was definitely a lot, but I'm just going to document some of my key takeaway. I take away the importance of leadership. I do believe that one of the things that we talk about a lot is proactive leadership, and that's the art of thinking ahead, seeing beyond problems, and taking informed action to achieve desired results. Leadership is key and is vital to achieving success. And every business definitely should understand leadership from this perspective. We also spoke about the issue of strong value proposition. We have just released a new book, and if you go to the bestseller portal again, you will see that book where we talk a lot about the importance of having a strong value proposition. In the book, we talk about the MVO, which is your minimum viable offer, a most viable offer, and maximum viable offer. What is the major differences between the two, and which one should you be looking at as a rising star in business? So the point that Peter spoke about, a strong value proposition, strong products, strong services, is definitely important. He also spoke about marketing. Of course, marketing for us is really taking the time to understand your market. And understanding your market is a very deep subject matter, where you're taking the time to understand clients, potential clients, understanding competition, understanding strengths, weaknesses, opportunities, and threats, understanding ways in which you could differentiate yourself, understanding ways to get visible, how to reach your target market, how to make impact, how to optimize conversion, how to build confidence, trust, and credibility. So it's an ecosystem as we talk about these issues in relation to marketing, as Peter would have just hinted on. Peter also talked about management and team, I believe is the other subject you talk about, management, team, and I believe sales. So a whole lot was covered in Peter's presentation. I know he also spoke about the personal life master plan. And what we will do as time progresses is single out subject areas. Like, for example, what is the personal life master plan? What does it looks like? What is the depths of the personal life master plan? We'll also perhaps look at what is family life master plan. What is the depths of it, and what it really means to you. What are the ROI, return on your investment if you take the time to understand the concepts and apply those concepts? What is the importance of the community life master plan? What is your ROI, return on investment, to really learn, apply, and master the systems as Peter will talk about? And the last element to what he would have talked about there is your corporate life master plan. And think about this. You, an individual, have your corporate life master plan. It means that you have a game plan, either as a business owner or as an employer, how you want to elevate yourself in this ecosystem. And having that body of knowledge is what can give you a major competitive advantage. One of the things that I said in one of my books is people can never grow beyond their sense of self. And having that master plan is what really gives you that sense of self. It gives you an anchor, it gives you a sense of self, it gives you a sense of direction. So that was definitely a lot that you said, Peter. And I can't wait for us to go deeper into each of those headings to really help the public to truly understand the essence of having a master plan. All right, without any further delay, I want to now come to Frank. Frank, thanks for your patience. And I know you're anxiously awaiting to dig in and to share your wisdom in relation to those factors that are either holding businesses back or pushing them forward. All to you, my friend. Frank.
All right, thank you very much. And I have to come behind those esteemed presenters, but I'll do my best here. One of the things that we need to realize is that learning how to navigate business problems is an essential skill for professionals in any organization. Businesses might encounter problems regardless of their size. And the problems that they encounter are due to marketing conditions, or what economists call the industry trends. If you're researching common business problems, it can help you learn how to prevent them from occurring or effectively navigate the challenges for your organization. And some of the problems of businesses, and we must note that the business problems are obstacles that a business might encounter as they continue to conduct their operations. And when we learn more about common business problems, it can help your organization or company develop a plan to react to these obstacles effectively. So the first problem that sometimes we face is there's an uncertainty in your purpose. And some companies experience a loss of purpose or uncertainty. And this can happen if an organization participates in like multiple different industries, or they're frequently changing their mission statement. So them having an uncertain purpose can affect sales. It can affect employee motivation or other processes in a business. So to help find purpose, a good idea for business leaders to come together and to collaborate on what they want for the organization. And this open discussion format can help all business stakeholders voice what they want for the company's future, and the direction that they want to see the company. So they provide a direction for the company's operations. They can also create a comprehensive and specific mission statement, which can help the organization find the purpose in the market. Another thing is weak brand identity. Any company that have a weak brand identity might experience low profit margins or a small number of sales. If a company wants to grow, it's a good idea to develop the brand identity. And this can improve customer loyalty and the company's brand awareness in the market. To improve your brand identity, a company might establish its core values, its mission, and goals that will help the employees, consumers understand more about the organization and its purpose. If the company create articles, they host press releases, or start promotional campaigns, which can help further educate individuals about the company, what a company has to offer, such as services, products, etc. The third problem is low customer value. Now, creating products that customers want is important for company sales and loyalty. Some companies that attribute shrinking profits to market performance might miss value improvement opportunities to enhance their products or services. And when companies don't create products that a customer wants, those customers are more likely to shop at other competitors. So, for solving that, you conduct market research, which can help build or cause the companies better understand their consumers. Analyzing the competitor products and service can also help a company find opportunities to make its products or services unique from the other competitors in the industry. Some companies also develop consumer surveys or review consumer feedback reports. And these feedback reports will help them to learn more about what customers want. Number 4, future planning is important. And the problem that sometimes companies face is they have a minimal future planning. So companies that focus on short-term performance might very well experience long-term losses. Lack of future planning can also hinder a company from navigating the market changes. Creating a traditional business plan can help the organization plan for future growth. Developing a massive action plan, we call it MAP, can help companies respond effectively to any changing market conditions. And finally, the no exit strategy. Some companies want to exit one market and enter another consumer market. Companies that don't develop an exit strategy might struggle with transitioning to a new consumer market. Some companies might also experience a buyout, they may experience a merger, or even an acquisition. Um, an exit strategy can help company take care of its employees and consumers. You don't want to know when you're leaving what happens to those consumers. You must have um, an exit strategy that will take care of the persons, of those employees who have been there with you, of the customers or consumers. And some of the items that companies consider in the exit strategies will include what is your financial status? What is the business option? Who are the investors that you are going into bed with, or merging with? And importantly, communication. Communicate, communicate, communicate. Because of time, and I have another meeting to attend, I will have to leave at this point. But these are some of the problems that the companies will face, and some of the solutions that um, they can get involved in so that they offset or solve whatever problems they face. Thank you.
Um, there was definitely a menu of challenges that we see can undermine the growth of business. You talk about the mission statement, you talk about brand identity, you talk about market survey, consumer survey, you talk about future planning, you talk about exit strategy. Now,
Communication.
one of the primary objective of hosting today's program this way, and that is to give each moderator an opportunity to identify 5 challenges that businesses are faced with. The objective behind this is to really show that to manage a business successfully, there is an entire ecosystem relating to business that you need to understand. All right. Each speaker gave a different perspective. They either expanded or they include or they bring new concepts of issues relating to factors that are going to hold you back and factors that are going to push you forward. So, as a rising star in business, as a key player in business, I trust that this information was useful to you. In pulling the curtain down on today's program, there's just a couple of things that I want to highlight. At our organization, we talk a lot about what is the business success ecosystem. Of course, this is based on research. This is based on the fact that we're applying these systems in the international market. And because we're applying, we're getting feedback, we're documenting those feedback, and we're now going to make that information available to you. One of the things that we have seen in business is that proactive leadership is vital for business success. Peter spoke about that in the brief, but we will go deeper into what is the proactive leaders ecosystem. We will also talk, Frank was just talking a little bit about culture. We will talk also about what is the corporate culture ecosystem. What is your corporate culture looking like? Is your corporate culture built out to have 4 points of impact? Are you impacting your team and your workforce? Are you impacting the ideal client? Are you impacting the public? Are you impacting the business cash flow the way you want it to cash flow? These are things that we will go deeper into to show that you truly understand how a corporate culture ecosystem should be built out. We will talk about team dynamics ecosystem. In building an organization, you want to be certain that you have your strategic team that is well built out, your tactical team that is well built out, your operational team that are well built out. In the absence of having what we call your team dynamics ecosystem properly looked at, is going to undermine the success of your business. Our objective here is to provide you with essential information that will help you to make better, smarter business decisions. We will talk a lot about market research ecosystem. It's about going to the market. It's about getting critical market intelligence. that's going to help you to make informed and educated business decisions. If you don't have data, if you don't have information, it means that you're speculating. It means that you're doing business with that blindfold over your eyes. And you want to remove that veil from your eyes. You want to ensure that you have the essential information, the essential body of knowledge that will help you to make smarter business decision. This platform is all designed to ensure that you understand that ecosystem, the research ecosystem that will help you to grow in the right way to scale your business. Of course, Paul is an expert in this area. We will talk about capital markets ecosystem. The capital market is a broad ecosystem. We will talk a lot about financial mix so as to ensure that you continue to have the kind of information that you need to make essential financial information. So we'll go deep into that as we go deeper into the ecosystem. I'm happy that we have Paul here to support with that process. Of course, we will talk about economic systems, ecosystem. We didn't go into that a whole lot today, but economic systems will also affect your business, and you need to understand that. There is planned economic system, there is mixed economic system, there is laissez-faire economic systems. You need to have an understanding if you're thinking international business about how these ecosystems, economic systems, ecosystems, are going to affect your business. We will do that deep dive into this over a period of time. Last but not least, you need to understand what we call the communication media ecosystem. And this has everything to do. If you have a business and you don't understand what is mass media communication, radio, television, newspaper, if you don't understand what is social media communication, how to, identify your ideal client, how to do specific demographic targeting across the social media ecosystem, you may be at a disadvantage. We'll also talk about the metaverse. How important is the metaverse today as a communication ecosystem for you to leverage to grow and scale your business? In the developed world, we have major investment is taking place along the line of the metaverse. We have the biggest companies that are building out their platform here. They're attracting millions of their consumers over to this platform. If you're not aware of all of this, your customer base may be shifting, all right, away from you and undermine your potential to grow. So we'll do some deep dive into that. Last but not least, we will also be talking about independent communication platform. So this ecosystem, what we call the business success ecosystem, it's research based. It's systems that we're applying to ensure that you have the kind of information to win in business. All right. So I trust that the summing up of what we have done and what we intend to do has really whet your appetite to continue looking at this program, following us, and benefiting from the platform. With that being said, I know that Joel had to leave. I know that Frank has to leave. I want to give Paul and also Peter an opportunity to give their closing remarks before we pull the curtain down on today's program. You guys have been wonderful guests. Looking forward to next week. Next week, we're going to flesh things out. All right. We're going to have some agreement, perhaps to disagree with each other, but we're going to flesh things out and give individual perspective on particular topics. Paul, all to you. What are your closing remarks?
I just want to let you know, you and Peter and Joel and Frank, they're gone now, but how much I enjoy this. This is outstanding information. I enjoy providing it. I enjoy receiving. I'm taking notes. I love what is leadership? What is it? You need, like Peter said, you need a plan. You do. You need a plan for everything. I mean, in an emergency, you're lost in the jungle, you need a plan. If you're going on a vacation, you need a plan. There's nothing, I don't think there's anything you don't need a plan for. Maybe going to sleep, right? But that's it. Master plan, brand identity. I enjoy being a part of this, and I think this is going to benefit people so much to get this information. So thank you for putting it together, Gary, sincerely.
True. Yeah,
That's
yeah,
really
and
All right, that's a great share.
I wanted to just go back to something that Paul was saying earlier in the conversations before we started, and he was making mention in Detroit how one particular client, how connecting with that client and going into areas that was outside his comfort zone, but venturing out like that was able to connect him with individuals that brought him business, impacted his business in a positive way. And I think this is what is happening even now, even right now, and the importance, of what I've said a while ago in building plans. What plans do show is what Joel was saying. We're gonna see our weakness, and people like to embrace their strengths. I'm good at this. I'm good at this. I'm good at this. But no matter how good we are at what we do, it is our weakness that is going to be our downfall if we do not take advantage, if we do not make preparation and create a plan to mitigate. Your word, Gary, to mitigate, for our weaknesses. So, we have here, with what this platform, it's good when we can have individuals that are blind spots. We can have individuals looking at our blind spots so that, and we have this collaborative process, and we can represent. I know that no matter where I am, what I have to deal with, I can always reach back to a partner to say, what, I meet the situation. I do not know how I'm going to deal with this. But we can approach life with a greater level of confidence because we have a network. It's not just us alone now. We have a network that will, somebody can step forward. And this is what the world now needs. We do not need any more division and tearing down and all of the things that we're seeing happening. And if we're going to really make an impact in the next generation, it is platforms like these and expanding, into, as Paul says, going out into places, um, to create those collaborations. It's really the right direction. So again, Gary, thank you for, I've known for about 7-8 years now, and this is you consistently do stuff like that, and I must let you know that I appreciate it.
Okay, my friends, thanks again for taking the time to be part of this program. Each and every one of you make valuable contribution to this platform. And I must say, there is that, excitement and joy just to come here to share. I do believe that, the reason we have knowledge, as Peter would say, is to share. So this platform is definitely a sharing platform for rising stars in business and those that wants to know more about finance, how to access finance, how to grow, how to scale a business. You're at the right spot. All right. So with that being said, I see Paul is saying collaboration, not competition. You're perfectly
Yes, yes,
correct.
yes.
Collaboration, not competition. And definitely, we are all about the collaboration, and we can, sweep the competition under the carpet a little bit and collaborate to make great things happen locally. And I have to say across the world because we are not just operating locally; we are a global brand, and a lot of work we have to do here to ensure that we provide businesses, micro, small, medium, and large scale businesses with the kind of information to make stronger impact. So with that being said, I want to thank you guys, and I'm looking forward to working with you again next week as we do a further deep dive into analyzing one of the topic areas that we looked at in this week. All right, so I may either go with Joel or I may go with Paul White. I think Paul White will be present.
White
So I
House.
do believe Paul Whitehouse.
It's
So I
close.
do
You
believe that
almost
we
had it. It don't matter. I
got
know,
you.
I know,
We,
I know you, and I know you know me.
you got it.
Call me
So we
Bob. I
most
don't care.
likely Yes, my friend. Yeah, so we most likely will do a deep dive into some of your talking points, so as to ensure that we're bringing more clarity to the public and ensure that we can help them to take action and to take action now to achieve their business objectives. For that, thanks again, you guys, and enjoy the rest of the weekend and see you guys next week.
Have a nice day.
All right, my friend. Take care.